detect and correct any kind of error or fraud. So management and board of directors implement this as a plan of organization and system of procedures. Have you noticed that, you know, you are entering the office, there is a door, proper door over there, there is a camera over there, maybe the thumb impression, there is a security guard. You know, why there is a security guard in head office? It should be in factory, but you will find over there as well, because the check forgery going to be over there. Maybe you need to prevent that. Or there is some kind of control over there. You will see that, you know, managers are, you know, they sit separately. The subordinates, they sit separately. So it means this is a plan of organization, and in that plan of organization, you devise how you sit inside the office. You devise some kind of internal control, right? So the objective of internal control are to safeguard the assets, of course, encourage employees to follow policies, right? For example, tampering of office chairs and you know, tables, or destroying the property is not ethical. You need to follow. Okay, if you are making tea over there, if tea is spilled out, please wash over there, or clean that place so that it looks very nice. You don't, you know, damage the property of the office. Promote operational efficiency. If there is an internal control, everybody knows that I am just here to work and then I'll go back. So when you're here for work, then it increases your operational activity. If you are here to work and judge others, and also, you know, to learn about new ways how you can steal, how you can make a fraud, then of course your operational efficiency will go down. Ensure accurate, reliable records. So all the records are kept in head office in some kind of safe or something. So that also exercises internal control, so that you can always have something backup to tally with that. You can match different reports, right? And then comply with legal requirements. But this is also a legal requirement that you establish internal control. Why? Because shareholders are the owners who are not running the company. Company is run by
executives,
managers or executives, right? So
shareholders only get the profits.
Right. So managers and employee, they will say that we are working hard for this company and all the profit will go to shareholder who do nothing. So this creates agency conflict. And in others, like in finance, in accounting, in auditing, in business management, in introduction to business, you will learn this terminology a number of times, that you can reduce the agency conflict, but you cannot, you know, eliminate that one, right? So in order to protect the interest for shareholders, so it is mandatory for every company to establish internal control. So there are also a law here. We call this Sarbanes-Oxley Act, or S2X Act. So I'm not going to read that one because every country has its own. So this is for your information. Just read it out. Here we go. So according to Sarbanes-Oxley Act, so basically, if you establish internal control, you can reduce fraud, wastage, inefficiency. Why? To protect company assets. So the components of internal control, these are, so think of a company and think about its risk assessment here, or think internal control as a company head office or company office or a house. I think house, it would be more better. So similarly, when you build a house, you do some kind of things to have internal control. Similarly, when you are in a company, you build this internal control to protect the company. What is that? Let's talk about this. Control environment. So these are called tone at the top, and it should be code of ethics. Let me just show you this. So here we go. What do we mean by control environment? So it is the tone at the top of your heart or house, just like that. So control environment should be ethics. What do we mean by this ethics? It means when you hire top level manager, hire ethical person. So that's why for executive jobs, there are going to be 2 or 3 interviews. At initial screening, psychologists or different people, they talk about on his background, they collect background information, they give him some different puzzles, and the underlying objective is to find out that whether he is ethical or not. For example, in China, I was called for an interview. It's a company, I just don't want to mention the name here. So they have a huge furniture warehouse over there, and they asked me one thing. In China, there is, more of the corruption, how you handle the corruption. Or if you given a chance to, 2 or 3, to take out 2 or 3 furnitures over there. So would you do that or not? So these kind of questions basically are asked to evaluate your ethical behavior. And if I told over there that, okay, if everybody is taking 1 or 2 furniture, so naturally I would also take that. So at that point of time, they will not suggest me to higher position. Why? Because I cannot maintain code of ethics for the company. Similarly, the risk assessment, if you see, the risk assessment it is basically the external environment. You see, external environment. So you make this house to, if the rain comes down, it will go out, not inside, right? So the risk assessment is you identify business risks, establish procedures to deal with the risk. Somebody's, jumps into the office or damage the property, from external threats. Or the retired employee, he knows all the stuff, so he can come into our office. So you need to protect the office like that. Only employees or authorized person can enter the premises. That's it. Information system. Systems to capture, process, and report transactions. So you install latest IT technologies, like in many many countries, they have special softwares for public companies. You need to establish that one, and every entry you need to post in that through that software. And at the end, if something is not matching, if debit is not equal to credit, at the end the message will pop up. Mostly it will be operated in banking, because you receive cash, you pay cash. At the end, the receipts and payments, they must be matched with the balance. Otherwise, either you pay somebody else extra amount, or either the person, he pay you less, or you paid, or you just put in your pocket some extra cash. That's it. So you establish or you install those information systems, which basically reports every transactions, fairly, ethically, and they have the backup. Control procedures. So these are built into the control environment and information systems. For example, you install camera, thumb impression, or you make authorized person access to vault, right? Even in a bank, only authorized person can go to the vault where there's a big cash over there. Not every person or every employee can go over there, right? And then, of course, after all this, you need to monitor the control as well, whether these things are working properly or not, right? And in order to establish this one, you can hire both internal or external auditors to verify that. So whether this department is giving us this income statement, whether this is true or false, it shows that there's going to be a $1 billion profit. So this profit is, authentic, or they just made up this number. So it will go through one layer of checking. We call this through internal auditor. They signed the statement that, okay, this statement is true. And then the company call external auditors. So these are CPAs or CAs, ICAs, chartered accountants. Basically, they look at all these things, they tally with the receipts, all those stuff. So at the end, they sign on the balance sheet items or the statements that according to good faith or according to the knowledge that provided to us, these reports are made in good faith for the public, right? So if you want to remember all these procedures, so remember SCALP, SCALP. So you basically hire smart people, hiring smart people, background check, training supervision, competitive salaries, clear employee responsibility. So that will reduce the chances of fraud. So there is also competitive salary as well. If you pay less salary, then which triangle, fraud triangle activated motive. I am working day and night for this company's success and I'm not given well, or I'm not given enough money. So you have seen a lot of movies of, especially in police department, when they raid some criminals, they found a lot of cash. So rather submitting or depositing that cash to the treasury, they take it themselves, because over there this triggers motive. Separate duties. So those who are handling asset, they must be different one. Those who are recording the transaction, they must be different, and those who are approving, they must be different. So have you noticed something? For example, if a check came for more than $1 million, the cashier will take his seat, go to the manager and ask his approval, right? So this is a kind of internal control procedure. Comparison and compliance monitoring, what does it mean? It means you make budgets and try to be in that budget. If your budget exceeds, then you need to justify, and that whether, for example, you made a budget for $1,000 and you budget that your work should be done, but you spend only 600. That is also poor management, because you wasted or you keep blocking extra $400